Hello, hello, hello. Welcome back to my YouTube channel. Miss Fierrrce here from the Fierrrce Trade House. And guys, this is our Fierrrce Forex for Beginners YouTube series, Module 6. This video, we are going to tackle chart patterns, support and resistance, and trend lines, and just basically trying to understand what those are. But just to give a recap here, what we've covered so far in the past couple of modules, we did an intro to Forex, we covered Forex terminologies, we tackled market quotation and calculation of pips. We then went on to market analysis, looking at different charts. We tackled brokers and the different types of brokers and what you need to look out for when you are opening your account, how to open a demo account and a live account. And then we tackled in the last module 5, we have 2 parts, part 1 and part 2. We covered MT4 and MT5 and trading. Okay, so again, this series, we are in this module 6, we are going to tackle chart patterns, okay, and SRTs, or support and resistance. Now, that being said, what are chart patterns? Chart patterns are basically, what you see. I mean, this is still part of technical analysis. And this is what you look at when you're looking at a chart, whether it's a line chart, it's a bar chart, it's a candlestick chart, Japanese candlestick chart, or whatever candlestick chart you'd be looking at. What you're trying to decide when you're looking at these charts is basically where you as a trader should enter or exit the market. So the patterns that form in the market are what give you a clue or an idea of what to start thinking about in terms of your entries and your exits. Okay, so I'm just going to focus on a couple of chart patterns, the most popularly known ones. Okay, and then we'll move on to looking at defining what support and resistance is. Again, this is just at a very basic level so that you can begin to understand how to begin your technical analysis. So the first chart pattern we're going to look at is the double top and bottom, or the multiple tops and bottom. Okay, now this is a good example of a double top chart pattern. So let me just break this down for you guys. Okay, now this is a candlestick chart. Okay, so if you remember what we talked about in a candlestick, what you see is, like in this scenario here, we see the body of the candle and then we see wicks. Now, the size of the wicks can range, and so can the body of the candle. And if you looked at the resources I shared in the previous module where I mentioned candlestick charts, I gave you resources for candlesticks just to study further on candlesticks. And in those resources, you learn about the different types of candlesticks. Okay, and the reason being, when we talk about candlesticks with long wicks, or candlesticks with no bodies, or candlesticks with small bodies, or candlesticks like these ones up here, huge wicks here, these candlesticks with such long wicks often show rejection in the market in terms of the price, or at a specific level it shows a potential reversal. Okay, so what we are seeing at this point in time, price from this low here to this high here, we are basically buying the market. Okay, so whatever currency this would be, we would be buying the market. So price pushes up and then it pulled back and then it continued to the upside. Okay, now when we see this happen here, okay, so this here was a bearish candle, okay, in this example. So price pushed down, okay, formed a low, and then it began to push to the upside. And then it got to a certain level and began to push down again, push down slightly, almost came back to where this initial candle here began to push to the upside, and then rejected that level and continued to push up, came down again and pushed up. Now at this level here, what we see is a first initial stop of the move to the upside. And when I say that based on the candlestick that formed here. What we see is price pushed up, and then there was a long wick that formed, okay, over here. And then the next candlesticks that formed were bearish. So this was a bullish candle, very aggressive, We are seeing a long candle with a long body and a long wick. And then we see these bearish candles, or the candles that are pushing to the downside. And when this was happening, there was this candle here that tried to continue the bullish trend. So we are seeing that price actually came back to around the same level where this initial one formed. And then for whatever reason, it rejected and then closed over here, okay, this here. So candle came down, closed, came actually lower, but then came back again and closed here. Then this other candle came and opened here and now continued to rally to the downside. So what this here tells you is that there was a level of resistance, okay? There was a level of rejection up here, because when price came here, unlike maybe in these areas here, yes, it rejected, but then it continued to move up. We see that there was a major rejection, and this rejection happened a couple of times at this zone, okay? And then finally just started pushing to the downside. So it rejected the move to the upside, and that's why I'm talking about a rejection. And sometimes what we look at it is like it came up here and then formed, hit a resistance point, like the price was resisting to break to the upside. It tried, but failed. Okay, then it tried again and failed. And it also tried here in between, you know, a couple of times and then failed. And then finally, it just broke down. So this zone here is a level of rejection or resistance. So we can say that when price pushes up, it usually gets to a level of resistance, okay? And this is the resistance where it's the last point at which price pushes up, and then it begins to pull back or retrace, okay? And so this was the pullback or the retracement, okay? So when we look at it from this perspective down here, price was at this low again, pushed up. At this point in time, it found some resistance or a rejection level, came down, came back again, took out this high here with this candlestick here, but then formed another higher rejection or resistance level, came down and then started breaking down slowly. But when it came here, it failed to continue downwards. It came to another resistance, but what we call this resistance down here on this retracement is actually a support, okay, or a support level or a floor. So we have two things you're thinking about. The support, you know, when price is pushing down, it comes to a level where it stops to push down. That is usually the floor of price or the support of price. And then when it pushes up and it stops to push up at some point, you find a level of resistance or rejection, okay, and then it retraces. So usually you'll find different levels of support and resistance within a chart. So for example, came from here to a resistance here, came down here, formed a support, came here, found another higher resistance, came down, support, and so on and so forth. Then this was the major support level. And then when it pushed up here, at this high here, it formed a resistance before it came back down, formed a support, and then pushed up, formed a resistance, and then pushed down and formed another support, and so on and so forth. So basically, a resistance forms on the highs of the candlesticks, usually the highest point of the candlesticks, and then a support usually forms at the lowest point of a candlestick, okay? So resistance can also be referred to as the ceiling. Sometimes you'll hear traders refer to as the ceiling of price is at this level, or the resistance is at this level, okay? And others will say the support of price or the floor of price or the bottom of the price is at this level, okay? So support and resistance, you keep on seeing different levels of support and resistance as you observe the different charts that you're going to be looking at in your career as a trader. So, and we continue. So we dropped, formed a support, pushed up, okay, and then formed a bit of a resistance and then pushed lower and took out this support level and pushed even lower, forming a lower support, and then finally pushed up again back into this area, into this zone, okay? So when it pushed up and retraced, it formed a bottom here, and then it did not quite go down, it just formed up here, and then it pushed up again a second time. So we can see clearly that there are two clear, despite the multiple wicks, okay, the wicks of the candles, there are multiple of them, we can see two clear levels of resistance. So when you're looking at a chart, you're looking at what is obvious, okay? Yes, there are many support and resistance in the chart, but we're also trying to look at the ones that actually are significant. Not all support and resistance levels are significant or are worth paying attention to, okay? And you'll recognize this as you keep on observing different levels of price on a chart, depending on the time frame and so on and so forth. So these are the significant ones. So if you look at this chart overall, based on what I've said, you can technically see the major levels of support and resistance. Like, I don't even want to say major, I want to say the significant ones, the obvious ones that I don't have to think about too much. I keep on telling traders, keep things simple, okay? Don't try and figure out, is this a support, is this a resistance? There are many of them, but you're looking at the ones that even my 7-year-old can be able to come and tell me, this is a high, this is a low, this is a high, this is a low, this is a resistance, this is a support, this is a resistance, this is a support, 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 resistance, resistance, support, Now, what you also see is that a support level like this one here can end up in the future being a resistance level. Same drill here, okay? So this here broke out, came here, formed a support, okay? Went up, came down, okay? Then at some point here, there was a mini resistance because you can see this candlestick came down and closed down here before this one formed and pushed back up, okay? So this here is a resistance, okay? But at some point here, when this candle came down after it pushed up, there was this wick that came here, this could have also been a support, okay? But now we know that, but now we are always looking at the significant and the obvious ones. Support, resistance, support, resistance, support, resistance, support, resistance, and so on and so forth. Now, when we see these two, like we see this 1, 2, okay, this is the first top in terms of this chart pattern that we are seeing. And then we can see this is the second one. Okay, yes, there are multiple, but these multiple ones formed a significant, it's like when you're drawing on a piece of paper, you can put one dot, but if you put multiple dots, that dot looks even more pronounced and more significant and more obvious. So that's what we're looking for. We're looking for the obvious things on the market or in the charts, okay? So this was the first top. And then what we see here, the second top began to form, and then it came again. And then we see this long wick up here. Okay, this long wick here. Now, what we see here is that this is like a false move. Why? Because price rallied up, took out this high, this resistance, took out this resistance, and took out all these other resistance to the left. Okay, and then what happened is it looked like it was pushing to the upside, okay, but then it came all the way back down and formed a very small body. So what we are seeing is that let's talk about it in terms of buyers and sellers, or I don't even want to say, in terms of buyers and sellers. So you know that a buyer wants the price of an asset to keep on going up because that is when they're making money, and a seller will want the price to go down because as it goes down, that's when they're making money, right? So you'll find that this move here would have tricked buyers into buying, because before this candlestick closed, there was a point the body of this candlestick was probably up here, and then so it could have been looking as bullish as this candle or as bullish as this candle. But then what happened, by the time it was closing, it came back down. Okay, so we saw a really major rejection, and that's why I'm calling it a large false break pin bar at the double top. So this is the top one, top two, and then at the top two, there was this pin bar formation. So again, if you look at the candlestick Bible or resources that I gave you to read, you'll understand what I mean by a pin bar. This is a type of a candlestick. It has a very small body, okay, but it has a very long wick, very long rejection wick, okay, and it's forming at the top of this trend. Sometimes it will form at the bottom of a trend, but here it has formed at the top. So this just depicts a false move. And then guess what happened after this false move? Price completely broke down. Okay, so this here is a typical double top, okay, pattern, and it has a combination of the candlesticks that give you a narrative in this whole what is happening. We see rejection here, and then again we begin to see rejection, but then this candle comes and totally removes all these other highs on the left, and or takes them out and then drops, okay, and forms this pin bar. So this was a false move. So when you see a move like this in the market, okay, that is followed by some kind of price action. When I say price action, I'm just talking about the action of the price, which is printed by the candlestick. So these candlesticks are showing you the action of the price, and how they print on a chart gives you a story of what is actually happening. So we know that price pushed up, but then there was this wick that formed rejecting this level, another second rejection, and then the third significant one, and then price broke down. And as it was breaking down, it was trying to push up again, and then it breaks down, then push up again. So it was forming some pattern. You see, some pattern. If I was to draw a straight line, I would go down, up, down, up, down, up, and so on and so forth, until now we finally pushed down. And this candle here took out this level, this support, took out this support. So as price is pushing down, please note it's taking out previous levels of support. So this was a support, price took it out, okay? This was a support, price took it out. This was a support, price took it out. This was a support, price took it out on a downtrend. On an uptrend, we see that levels of resistance are taken out. So this was the first level of resistance, came down, this candle took out this resistance, came down, and then finally this move up took out resistance to the left, okay? So basically a trend up takes out highs, and a trend down takes out lows. And when you see two significant or sometimes more formations like this, this is what is known as a double top, okay, pattern. Hopefully that makes sense. Now, so when we look at it even more, this here in the middle where we formed the resistance zone, okay, I call it a zone because, or rather a support zone, we find that, you know, the levels of support are different, and that's why it's a zone. And I'm not just saying it's a support line, it's a zone. This area is a strong level of support because price kept on coming at different levels around this zone and failing to break down completely. Okay, so what it formed here after it formed this double first top, it came and formed a neckline. Okay, so think about it like your head has a neck. That's how I can look at it. Okay, so this is the neckline, and then price pushes up, formed the second top, and then when this price came down, it took out this first neckline, okay, and signifying that price is actually very strong to the downside. And then what it did, it retested, and then as it's moving down, it's breaking other necklines, okay, as well, and it's now dropped. Okay, so when I've added these other, you know, terminologies here, you kind of see the chart a bit better, okay, and you can see that, okay, what is price actually doing? Okay, so that is the double top, first top, second top, and then there's this neckline in the middle here, and then price has broken down and then retested this zone. So this is a very significant zone because it, like I said, this was a support, but then here it became a resistance. When price was pushing up, it rejected going back to the upside and then just dropped. Okay, so you'll see this happening a lot in the charts, whether you're trading currencies, cryptocurrencies, you're trading metals, indices, you'll be seeing these kinds of moves where price keeps on breaking down or breaking to the upside. Breaking down, taking out previous levels of support, taking out previous levels of resistance as it goes up, and support as it goes down. Okay, now, so what we see, like I've just added a bit of annotation, extra annotation, is in this scenario here, yeah, I've already mentioned the support, the neckline is broken, and the support becomes a new resistance for some of these candlesticks here. Okay, and then hence what I said, support can become resistance, etc, etc. So that's a double top. Now, the opposite is a double bottom. Okay, now price, so a double top forms during an uptrend, usually, and a double bottom in this case usually forms during a downtrend. So we can see price pushed down, pulled back, and then broke down completely. And then at some point here, it failed to continue to go down. And once that happened, there was a significant push away from this level. So there was a bit of a rejection at the support level. So forming the first bottom. Then price pushed up and then came back, retested, and we see it failed to break out to the upside, and then it did what? It dropped. And when you look at it closer, this could also have been a double top. So double top had formed after this uptrend. And okay, so those are double top within a larger double bottom, because when price dropped down, it formed this bottom here, the second one. Again, we're looking at the significant support and resistance level. So significant bottoms that we're looking at, because someone will say, why didn't we take this one? Because it came smack around the same zone where this first price action of the candles was happening. And this came again. And then what happened? It rejected completely and never came back here, forming this double bottom. Okay, and then this neckline was actually broken. And I can assume that after this break here of this level here, what I usually like to call break of structure, price just continued pushing to the upside. There was a bit of a retracement here with these down candles here, but then it broke out. So again, as price is pushing up, it's taking out levels of resistance and it's breaking previous necklines. And the necklines could have been here, could have been here, you understand? And then price now continues pushing up. So a double bottom forms during a downtrend, and it gives you an indication of when the trend is going to change from a downtrend to an uptrend. A double bottom forms at the top, like in this scenario here, and gives you an indication, especially when you combine it with the candlesticks and how the candlesticks are behaving and what formations of the candlesticks are happening, like this long wick here, you know that the trend is about to change at some point. So it changed here, minute change in trend, and then finally here, there was now the long trend change to the upside. Okay. Now, so in a real chart, this is how it would look. And again, we're going to look at this on our trading view charting software, which we discussed in our previous class or previous module. So we're just going to look at it a bit better there. But this is what we are seeing, okay? It's clear. We have a double top here, 1, 2, one first top, drop, top. Now in this scenario, we're even seeing a third top, meaning that this level up here is very significant and it's very, very strong. Like it feels like at this point in time, price is unable to go past this level. And that's why we're seeing, kind of repeating the same level, but really failing to do so and then breaking down. So this is actually a multiple top. So remember, you can have a double top or a multiple top. Price can repeat that level multiple times. And also we'll have multiple bottoms, just the way you can have a double bottom here. We can have multiple bottoms. Like this was a multiple bottom level, 1, 2, 3. Okay, so this is how you'd identify those patterns in a real chart. But we look at it on our proper trading view chart so that you can see properly. So the second other type of pattern I would want to just mention, I'm not obviously going to go through all the patterns in the world, but I'm just looking at the ones that I think are important, is the triangle and wedge patterns, because these tend to signify, change, a reversal. They're like reversal pattern or patterns rather. So when I look at the different types of patterns in the triangle, we have the ascending and descending triangles. And what we see here, so let's look at the descending triangle pattern, exemplified by this this chart, which I got off of Google. So this is not me who did this, but I just put it in here so that you guys can see. So disclaimer, this is not my original content. I got this specific image from Google. Anyway, so this is a Bitcoin chart, 1 week, gotten off from the Bitstamp exchange. And we can see in this scenario, we have a descending triangle pattern. So it's clear, this is a descending, meaning that it happens usually during a descending, when price is descending or during a downtrend, okay? And usually it confirms a continuation of the trend to the downside, okay? So descending, and then it forms kind of, now remember we talked about support and resistance. So support is the floor and resistance is the ceiling. So both are rejection levels of price, okay? But one happens at the bottom of price, another one happens at the top of price. Now, depending on how these tops and bottoms are forming, they tend to form certain kinds of patterns. So for example, here price came down, then started pushing up. It formed a support here because this move away was quite significant that it did not come back immediately. It went and continued rising, and then at some point, that's when it got to a certain level of rejection, and then rejected at that level, attempted again to try and push up, but failed, and then dropped. So when these two tops formed, if you draw a line or a trend line, you'll be able to see it forms kind of like a triangle. That's why we're calling it a triangle and a descending triangle pattern. So price pushes down, forms a double bottom there, multiple bottom there, comes back, fails to really push up, and kind of just respects this trend line, okay? So that's what we are seeing. And then finally, this last move here, it breaks down. So this is what we usually call a breakout. It breaks down of this support zone completely and just drops. So when you see a pattern like this, whereby it's like price is being squeezed lower and lower and lower and lower, there is a potential that this level here, this support level, may be broken, okay? And price may then break down to the bottom. Now, it's not a must it happens, disclaimer, but this is an indication, okay? So in a descending triangle chart pattern, there's a string of lower highs, which forms the upper line, this level. So lower highs, this is a high, this was a lower high, this was a lower high, and an even lower high, okay? And the lower line is a support area, this green horizontal area in which the price seems to be failing to break. So price keeps on coming here and failing to break, okay? And then finally, at some point, due to whatever, it finally breaks out, okay? So when you look at it on a chart, this is how you'd identify the pattern. Price was pushing up, and then it started forming this lower highs, but then not really breaking past this support zone until finally when it broke down here. And then it pushed up, and then what do we see? Same drill, we see another triangle kind of formation. So usually you want to put your support and resistance levels on at least a minimum of 2 lows or highs. So this is low 1, low 2. Okay, so that's how you draw the line, and then maybe extend it. And wherever you find that price tends to attract at that level. Same here, level 1, level 2 of the highs, and we see price actually just nicely respects it. The same thing here. This is 1 point, second touch, first touch, second touch, and so on and so forth. So you're not forcing anything. You're just basing your trend lines or your resistance levels based on what you see. This is a high, this is a high. You're not forcing it. You're not forcing this line. You're just drawing it, and if you're drawing it accordingly, and if you extend it, it actually forms a triangle. Okay, now the second triangle pattern is the ascending triangle pattern, and it's obvious. Okay, this one, once you've seen this, this is the opposite. Okay, so in the ascending triangle, what we are seeing is the support level now begins to form higher lows. Remember, in the descending triangle, this is forming lower highs. In the support level, in this ascending triangle, it's forming higher lows. So when you're seeing higher lows, you're anticipating that there's going to be a breakout eventually at some point to the upside. Okay, so higher lows, higher lows, higher lows. When you see this, you may not know when it's gonna break out, but it's a sign. So the thing about looking at these chart patterns, they don't give you an exact point in time in which price is going to move in a certain direction. They give you a general idea of what to expect in the near term or the long term. Okay, so it's very important to understand that these are not perfect patterns that are going to tell you, see this move, immediately this is going to happen. They're just an indication that a certain familiar move is going to happen. So if you know that, then you understand as well that trading is also about watching the market and anticipating moves. And you will never be able to anticipate a move 100% of the time. Sometimes you will get it wrong. Sometimes you will want to sell here, but you'll be caught in a pullback and then it starts selling. That's okay. It doesn't mean your bias was wrong or your analysis was wrong. It just meant that maybe there was something else you needed to look at to actually consider selling. Okay, so the thing about trading, there's a lot of things that you have to consider. You don't just look at a pattern and think we are selling or we are buying, okay, or we're about to buy. There's that what we call something that we call confluence. You add confluences to whatever you're looking at. When I say confluence, I mean you're going to add other things that can help you reinforce your initial idea. So if you think that this is a sell, then you're going to probably look at the price action of the candlesticks, okay? You're going to possibly look at multi-time frame analysis. So we'll cover that in a different topic or another module. So that's what I'm trying to get at right now. So yes, in a descending triangle, you see lower highs being formed at a very strong support level, which is finally broken. In an ascending triangle, you find higher lows with a very strong resistance level that is finally broken out. So this signifies a potential breakdown of price. This signifies a potential breakout of price to the upside, okay? So ascending triangles are classified as continuation patterns, okay? So these triangles are classified as continuation. So this was a downtrend, we are continuing down. This is an uptrend, we are continuing up. An ascending triangle is characterized by a bottom trend line that is formed as the price continues to set higher lows. The more touch points on the trend line, the more reliable. So the more touch on this trend line up, the more it reinforces your idea that price is going up. So even if you just see one touch here, I don't think you need to start thinking you want to buy right now, okay? Because if you start buying here, you'll be caught up in this nonsense, up, down, before the final move, which can be very frustrating if you entered, excuse me, can be very frustrating if you enter too early because you're caught in all this and then you're anxious, you're wondering, oh my God, is this going to break down? Oh yes, we are happy. Oh no, my God, you know, you get emotional. So you want to see multiple confirmations. Again, that is what trading is about. Multiple confirmations, multiple areas of confluence, you know, additional things that give you an idea of what's happening in the market. An ascending triangle also contains a flat horizontal resistance, okay, that is formed as price continues to reject its previous highs for a given period. Once again, the more touch points on the resistance line, the more reliable the pattern will be to break out. Okay, so this is very basic beginner level information that a lot of traders sometimes tend to forget once they begin to advance. But just know that the more, think about it this way, again, in terms of common sense, the more a specific area, okay, keeps on being hit, think of it like a wall. So let's say this is the wall of China, for example, which is really a hard wall to break, I'm imagining. But let's say this is a wall. Anytime you keep on bombarding that wall, on an uptrend or a downtrend, it signifies weakness is being created on that wall. So in this case, we are going down. So there's this wall at the bottom here. Anytime we keep on banging on this wall with a hammer, the hole that we're beginning to create becomes bigger and bigger, and finally it will break out. So that's how I want you to think about it. Okay, don't cry patterns or anything. Just look at what price is doing at a specific level. Same thing on an uptrend. Anytime it keeps on banging the ceiling, the highs, trying to repeat, just anticipate at some point, and it's at the same time forming higher lows. At some point, price is going to do what? It's going to break out. Okay, so that's the triangle patterns. Now, next we have symmetrical triangles. So we have the ascending and the descending, or the descending and the ascending. Then we have the third type of triangle, which is the symmetrical triangles. And this is also very common sense, as you can see it right now. Symmetry, the triangle pattern that forms is symmetrical. So we look at this here, this is the support, this is the resistance. Relatively looking, creating a triangle that is relatively equal. So in this scenario of symmetrical triangles, there are two scenarios. Price can either move up or it can move down. That's why I put these arrows here. Okay, so when you see such, you have to wait for additional confluence or additional things that give you an indication that for sure we're either headed up or down. So that's a tricky thing about a symmetrical triangle, and that's why you can't just trade triangles individually on their own. You have to add other elements or indications that give you an idea of where we are going as a market. So we see in this scenario, price broke out. Okay, so it would have been tricky to know, but I'm sure when we dive deeper into looking at the charts, we will be able to explain why, for example, price didn't drop, but instead it pushed up. Okay, so that is that on the symmetrical triangle. Now, we also have a different type of chart pattern called wedges. Now, these almost look the same as ascending and descending triangles. Do you notice the difference? The difference is clear. With a wedge that is a bearish wedge or a downtrend wedge, we see that the support zone is also moving down. Remember, in the ascending and the descending triangle, the support zone was relatively equal lows, and that's when price was broken down. And then, but then with the wedge, okay, the triangle is actually literally descending, which is so interesting. Okay, and then price, as it squeezes price like this, price breaks out to the upside. Okay, so when you see a descending triangle that has the support resistance also in a descending trend line, okay, so it's not a relatively equal low trend line like a descending triangle, it's moving downwards, then you can anticipate a break to the upside. The opposite is true. When you're in an ascending wedge pattern, okay, we are seeing this wedge, this resistance is not a straight horizontal line with relatively equal lows. We have higher highs being formed. So it's forcing the wedge, the triangle to form in an upward kind of trend like this. When you see this kind of triangle wedge pattern, then you anticipate price is going to move downwards. Now, if you need to just remember this, I hope you're taking notes. If you're not taking notes, watch this again and then go to your charts on TradingView. I'm assuming by this time you've already opened a free account with TradingView, and start looking for these patterns. Start familiarizing yourself. The more you look at them, the more they become more visible. They become more obvious. Okay, so maybe right now you're thinking, oh my God, will I figure this out? Or maybe even now you're thinking, oh, this is so easy. But when you go to the live chat, you can't see these things. So I'm going to ask you to just keep on looking at this over and over. Come back, rewatch this video. It's on my YouTube channel. It's there. It's free. Watch it over and over until you're able to identify some of these patterns, and then you're able to anticipate. So a descending wedge, price is about to break to the upside. An ascending wedge, price is about to break down to the downside. The opposite is true. Descending triangle, price tends to break down. Ascending triangle with equal highs, price tends to break to the upside. So triangle, ascending triangle and descending triangle patterns are continuation patterns, while wedge patterns, descending wedge patterns and ascending wedge patterns are reversal patterns or retracement patterns, okay? Meaning they move in the opposite direction of the original trend. Opposite direction of original trend. Opposite direction of original uptrend. Hope that makes sense, okay? So now that we're here, this is something I just, it's just still a continuation, yeah. And I usually tell people the easiest patterns to trade in the market, for me, I have found, are the false breaks. The breaks that look like they're moving in a certain direction and then they don't, okay? So for example, even when you're looking at the example of the double bottom, the double top, the first pattern, we saw a false break that was formed by the pin bar candlestick. You remember that? Now, that false break, I find it easy to trade because I anticipate, immediately I see that, I anticipate a reversal, okay? And that's why wedge patterns are actually also easy to trade, because when you see them, you can anticipate a reversal. A descending triangle may not be so easy because sometimes you're not sure when the breakout will happen to the downside or upside, but a wedge is much more easier because you know for sure that we are changing direction, okay? So hopefully that makes sense. So when you're trading against the current momentum, false breaks are where you're trading against the current momentum. So the momentum is possibly up and then you enter in the opposite direction. So the momentum was down and then you enter on the opposite direction. The momentum was up and then you enter on the opposite direction. Previous aggressive push up or down. Then take your profit at previous swing high. So this is a typical way in which you can enter a trade, okay? So this is a descending wedge pattern. It's not a triangle, okay? So a triangle would be equal levels, equal lows. So the line would be, the support line would be a bit horizontal. Now, you then, when this breakout happens, you can take your profit at the previous swing high and swing lows. And I'm going to show you exactly on the live chart what a swing high, swing low is. So, but technically this is a swing high up here. So this last high before price started going down, this was it. So you could take your take profit up here. Similarly here, this was the support or the swing low, and you could have taken your profit when on this price broke out down here. Okay, so that's just a simple way. This could have been the swing low, the first one that caused this swing high, and then this was this was the breakout, and you could have entered all the way down here. So this would be your take profit on the sell. This would be your take profit level on the buy. So again, take your profit at previous swing highs and swing lows. Previous, what the highs or lows that formed previously. That's why you're targeting your initial take profit. And then you can simply trail your stop loss. And I'll show you guys that when we start going into the trading and everything, we'll show you that, okay? So that, I hope that is clear. If not, just look again, go back, look at the different chart patterns, the 3 ones that I've spoken about, try and identify them in the chart, and then begin to anticipate them even in a live chart. But of course, at this stage in time, I'm assuming that many of you who are still beginners are still on demo. So on demo, you can practice and practice and practice as much as you want, okay, before you go live. So now something else that is also easy to trade, so apart from the wedge patterns descending and ascending, because they show reversals, is something we call volatility contraction, okay? This is where you trade from a low to high volatility and vice versa. Low to high volatility zone and vice versa. The range of candles gets tighter and tighter. You trade this with the expectation that volatility could expand in your favor. So let's assume this was, price pushed down, it formed like a support level, pushed up, took out this resistance level, formed another higher resistance, and then came back down, formed a new support level, and then pushed up. Now at this level zone here, as we can see it, price is kind of, just stagnant. So we can see this is a low and this is a high. So from here to here, we can see a clear move up. So we are definitely in what? An uptrend. But somewhere around here, we are seeing price is just dilly-dallying. It's just moving sideways, like there's nothing much happening. So within here, we can see the volatility here is not as high. But here, even when you look at a live chart, you'll see even the candlestick formations, the candlesticks forming are probably pretty bullish, probably large bodied candles. Then when you come in here, you begin to see smaller candles, you see rejection candles, and so on and so on and so forth. So there's low volatility here. So price tends to move from low volatility to high volatility. So if you're in a zone whereby the price seems to be moving sideways, always anticipate or expect in the near future that price will break out and move towards high volatility. Okay, so this breakout here is the high volatility. This is where price is moving very fast. This is where price is moving very slow. So that's what we mean by volatility, fast and slow. Okay, so price tends to move from low volatility to high volatility to low volatility to high volatility and so on. And as it's doing that, guess what else it's doing? It's beginning to print certain candlestick formations that form specific patterns, maybe descending wedge, ascending wedge, triangles, double top, double bottoms, etc. Okay, so I hope you're seeing that we are now beginning to put everything together. We've known the patterns. We know how price moves from low volatility to high volatility. We're also going to combine that with the different candlestick specific ones that we want to look at. I probably will not look at all the candlesticks like I said in my previous modules, but I did give you go ahead to just do your research on the Candlestick Bible and read it and understand it to understand the different candlesticks. So that's it, guys. Chart patterns, okay? And then we have easy trades to look at, and one of them is the one for volatility contraction, where price moves from low volatility to high volatility. Okay, so in case you forget this, just come back again and review it until you kind of remember it going forward. Okay, so this here again just looks like what? An ascending triangle. Okay, relatively equal highs and relatively higher lows, higher lows, higher lows, higher lows. So the trend is up and it shows a continuation to the upside. Okay, so this is also another easy pattern to trade because it's a trend continuation. Trend continuation. If it was a descending triangle, it should also still be a trend continuation. Now, why have I written here cluster of stop losses? Because imagine it like this. Price keeps on pushing up, pushing down, pushing up, pushing down, pushing up. As it's pushing up, there's a certain level here that is not breaking. That's why it keeps on rejecting, right? And a lot of people are seeing this pattern in the market. A lot of retail traders are seeing this pattern forming. So guess what? Everybody wants to buy, right? Everybody wants to buy. So even you're thinking of buying, but now you're not going to just enter and buy anywhere. Why? Because you're going to be stopped out, and we learned this more in my advanced class. You'll find that there are a cluster of stop losses. Probably, if I'm a buyer, potential buyer here, I'll put a buy stop order or a buy limit order, and my stop loss will be around here. So when you think about it, there are many stop losses up here. Now, these stop losses, once they're all taken out, that's when price will now break out. So we will tackle this in a future class, but just understand that this is a very easy pattern to trade. You just need to know when the breakout, price to the upside, or in the descending triangle example, when price will break down. Now, when you see this breakout, it's usually very aggressive and it's usually a sign of strength. Why? Because it has been chipping away at this wall, at this resistance for so long that by the time, and you can see price just being squeezed. So imagine again a cone. At the bottom, there's more pressure than at the top. There's more pressure here, than at this level here. Okay, so once it breaks out, the move up is usually aggressive, and then you see that volatility is pretty high. Okay, so that's an easy pattern to trade. I find it pretty easy. Okay, so usually here we have sellers who want to sell, and we have buyers, because buyers want to buy low, sellers want to buy high. Okay, so it's just important to know what's happening. Okay, and also at this level we also do have buyers, okay, who are anticipating the breakout because they have learned that this is an ascending triangle. Okay, so just keep that in mind for future. So guys, let's go to the chart, and let's try and see if we can see some of these patterns. I'm not sure I can see them. Let's go to the charts. But hoping that you guys have gotten some value. Just trying to switch to the charts, guys. Give me. Okay, so I think I need to just get out of this first, and then just give it a few, guys. I'm still here. I'm just trying to share my trading view. I'm trying to share my trading view. Sorry for the delay. Okay, so let's do this. Okay, so there we have it. Now, so this is what we're seeing. I hope you guys can see my screen. Okay, my screen share is still paused, so you cannot see my screen. So let's do this again. Okay, there we go. Sorry about that short interlude. So let's try and see. So this is gold, right? So I'm not even going to look at gold. I'm going to look at a very one of the most popularly traded pairs, which is EURUSD. This is a very good pair for beginners to begin looking at because it moves gradually and in a very nice way. So again, I assume you're on TradingView. I assume you've set up your charts, you've customized them to your colors or whatever. Now, what are we looking for? We're looking for the patterns. Okay, so I don't know if you guys can see the patterns. Remember, we talked about a wedge pattern. So I could easily take my trend line if I can't see it with my naked eye, and I'd be like, okay, this looks like a wedge pattern, doesn't it? Doesn't it? If I draw this here from this low, maybe this swing low to this swing. Now, this could have been a descending wedge, right? But guess what? Price did break out to the upside. So once it was done doing what it was doing here, it did break out. So this descending wedge anticipated the breakout to the upside. Remember, it shows a reversal. So downtrend, reversal to the top. Let's look for another one. Maybe I can do, let me see if I see another one. I'm not even forcing anything. I'm just putting it on the bottoms that I can see. Okay, so in this scenario, Okay, I can't really, this is not really, so what we see, higher lows, higher lows, higher lows. And what I'm seeing is like price has broken down, right? I'm going to work from this swing low, this swing high, this swing low, and then we have this swing high up here, and then we have this. Okay, so what is this? This is a ascending wedge. Then what do we see? Breakdown of price. Okay, so price actually even came back in here, but then it finally broke down. Okay, so I'm using, even if I was, let me say I was looking at, I'm looking at this candlestick here, and then I'm using this candlestick here because this candlestick here formed the move here. So that's why I chose this one. And then the second one that tapped this triangle is up here, this high here. And then I simply just dragged my trend line support to there. And then price did what? It broke down completely. And then yes, it came back into this zone, but then it broke down again. So this is a typical wedge descending, ascending wedge pattern. We saw the descending wedge pattern. Okay. What else can I see? Same drill here. Ascending wedge pattern, kind of. Okay. And what do we see? We see price, like even if I was to take it there. Okay, we see price did what? Broke down. Okay. Ascending wedge. And so you find that ascending wedge patterns are usually in a downtrend most of the time. Okay, most of the time. So let me see. Do I see a triangle pattern anywhere? I don't know. Let me see. So we've seen descending and ascending. Do I see a triangle? Are these relatively equal lows? Possibly. And also, we're not forcing these things. If we don't see them, we don't see them. Okay, we don't see them. We're not going to try and force anything. So what is this? Okay, this is actually just oops. Okay, don't know why it's not. So what did we see here? We saw, I'm trying to make this look relatively equal lows, descending wedge here. They're actually not relatively equal, kind of. And then we see the push up. So we can see this is not a straight horizontal kind of thing. It's more headed down. And then we pushed up. I'm trying to look for the triangle, obvious triangle patterns so that we can see what is happening. Continuation pattern. That's what I'm looking for. So let's see, like this here. Not really. This is just as a triangle there and it's pushing up. I'm trying to look for a perfect triangle kind of setup. So this is a triangle pattern, and we can see price broke down here. Okay, it broke down. Then we see the ascending wedge here. And then something you'll find out, guys, is you, as a trader, you'll have a bias. Let me just warn you in advance. You'll have a bias of how the market moves. There's some people who tend to buy more than sell. Some people tend to sell assets more than buy. So for me, I found that I like selling the market more than I like buying it. So sometimes I may not see a buy setup as fast as I see a sell setup. So you'll find that it probably has to do with how your brain works. And some people, their left brain is more dominant than their right brain. So that affects also how you see the market. So yeah, the point is to just make sure that you're at least making gains. So what we see here is this a descending? Yes, this is a descending wedge. And we see price broke out nicely to the upside. This was a descending triangle, and price broke down. So if I maybe do this, I'm just putting on first support, second support level there, and I'm just dragging it across like that, trying to see if there's anything. I'm not forcing anything. I could maybe do that. This is pretty much when I look at it from this swing high. This is kind of like an asymmetric triangle, kind of. Price broke out of it. So, you know, okay. Anyway, so what you need to do is just look out for the different patterns that you can see. So we see this is again another ascending wedge, and price literally just broke down here. You know, you could have decided to enter a sell, and you could have still made some money at some point. Trying to make this easy. You can zoom in, you can see what you need to see. So what I'm trying to do is just to help you guys to see, you know, like, this is also an ascending wedge, and we see an opposite trade, ascending wedge, opposite trade. Okay. So practice looking for these patterns. Just practice. I mean, just practice. We see another ascending wedge here. So what are we expecting at some point? Price to break down. I mean, it gets easier when you keep seeing them over and over again. We're seeing another descending wedge here. What am I anticipating? Price would eventually break down. Could have been here. You know, price will eventually break to the downside. So if I was even to extend it further, you know, it forms an inch. I mean, if I extend it, it will form this, right? So you can see why price is we are dropping, and eventually the trend kind of, okay, in this scenario, I think I'm forcing issues. I don't want to force anything. I don't want to force anything. This is a descending wedge, and what we see is that price eventually broke out to the upside. So there we go. Price broke out, pushed up, you know, so very easy, guys. Just go through the charts, look at different time frames, look for those setups. Look for them. Look for them. I mean, when I just zoom in, maybe around here, I was trying to look for triangle, descending triangle, and whatnot. I'm looking at this here. Maybe looking at these relatively equal lows here. Then I just draw my So this is a perfect triangle, and what do I see? Price broke down, descending triangle. This, and I'm basing this off of this. If I zoom in, relatively equal lows. So I drew my line based on that, my trend line, like that. And then what do we see? We see point triangle. And what happened? Price broke out. So this is a continuation pattern. Continuation what? Pattern. So I think, guys, and again, support resistance. This is a resistance, a support. Let's look for a double top. Oh yeah, that's the one that we haven't looked at. So, oh yes, so double top. Price pushed up, formed the first top, formed an intermediary, and then formed this one that took out this high and then dropped. So this shows a reversal. Let's look for double bottom. Double bottom, probably this one here, double bottom. There's even double bottom here, price reversed, possibly double bottom here, multiple bottom here, price reversed. I want to look at obvious ones because I don't want you to force. The more simpler I make it, the easier it is. We see mini double tops somewhere here. Sorry about that. Mini, quite a bit messy, but double bottom, okay? Double bottom. Tap, boom. Okay, tap, boom. Multiple top down. Okay, so just scroll through. Double top down, double bottom up. Okay, hope that makes sense. So guys, if this actually makes sense, please leave a comment, like, just do whatever you do, the nice things. Share this with a friend as well who's trying to learn for the first time how to trade, and hopefully they will get some value. So that's it for module 6. We'll see you in module 7. Guys, later. See you soon.